Welcome to Swayam's MOOCs course on the course Public Financial Administration. Dear friends, today I am going to deal with the basics of public financial administration. And also in this lecture you will get to know about the nature, scope and significance of public finance. Before going into the meaning of public finance, I would like you to think about the question, what is finance? Because we hear the word finance regularly in our day-to-day life. So, the answer to the question is, finance is the lifeblood of the society. The society is dynamic only because of public finance. So, the importance of this course is necessary because the society deals with finance in our day-to-day life. From your cradle to the tomb, public finance plays a very important role. What is public financial administration? To elaborate on what is public financial administration, I would like to define the definition of public financial administration as a system which generates, regulates and distributes monetary resources needed for an organization. It is a generating system, it is a regulating system and also a distributing system which makes the society dynamic, and that is why we call this as the lifeblood of the society, an important gamut of the society. So, I can explain public financial administration as a proper management and allocation of funds, as managing public assets to ensure that the government has enough fund for all its activities. It also deals with the principles and practices concerning the efficient and prudent management of the funds or finances of the government. The government's importance is only found when we have to pay taxes, when we need to talk about the banking system. And so, public financial administration, because of its importance, is found its relevance in public administration too. Now, if we have to talk about finance, then we need to know that finance has to relate to administration, because an efficient administration of the government operation is only found in the efficiency of the finance system. Rightly put by Kautilya in his Arthashastra, finance is the fuel of administration. Finance is the core of all human affairs, and that is why we are now talking into dealing with the topic finance. Now, if you have to formulate a policy or implement a policy, then we need to talk about the finance. So, we could say that finance is a systematic order of affairs and the calculated use of resources aimed at making the desired things happen and everything that benefits the country. If the financial system is good, the administration is good, and in turn the governance is good, and it benefits the nation and helps and contributes in nation building. So, it is an important aspect of public administration. When you talk about public administration, we talk about, as Woodrow Wilson had said, it is a detailed systematic application of law. It is application of government policies, and that is only effective if there is a strong financial system. It is also to fulfill the organization's goals, objectives, and also to fulfill it not only with a purpose in mind, but also systematically and also scientifically. So, we can take public finance as an art as well as a science, because it involves both art and science, both in planning, organizing, implementing and evaluating the financial resources to ensure their best use for the achievement of their objectives, goals and targets. So, again we would repeat by saying finance is the lifeblood of a system, and if it is well monetized with socio-economic formations ranging from simple nuclear families to complex national and international organizations, we can see that finance is an important aspect. Now, talking about the Industrial Revolution. Industrial Revolution brought in a complete change in the economic order. It is a classical concept of the sphere of the state. It's modified by the latecomers of the Industrial Revolution. When Industrial Revolution set in, there was a lot of hue and cry. But then the scientific approaches made people to realize that economy is an important aspect along with the growth of the industry. But also, it is also an important aspect for the government. So, it also became an instrument of any legislature to bring in control, especially over the executive, so that the government can be dynamic in nature, operative in nature. It's a tool of accountability. Now, how do we say it's a tool of accountability? Going back to the history, there are two important aspects or two important countries which we can reflect. One, we can reflect about the British Parliament. The other is the US presidential form of government. You might wonder why I am bringing the British Parliament and the US presidential elections and also government. The British had evolved its financial system during the process after the First World War. The First World War was an eye-opener for British. British had not institutionalized its financial system. So, the Magna Carta became, which started in 1215, became an important change or revolution for even economic growth. The British realized that it was not tracking its revenue or expenditure. So, if you see the English Consolidated Fund Act of 1787 brought through an eye-opener situation. Why do I say that? Because they realized that it was important to record the revenue as well as the expenditure. Eventually, the British Parliament got control of the revenue and expenditure, and in 1822, at least they started off by recording the revenue and expenditure of its system. And in 1866, finally, full parliamentary control came over the revenue and the expenditure, especially the expenditures. So, the British Treasury became very popular. The British Treasury became evident in every policy formulation because they wanted the crown to be committed to the people, and they saw that monarchy was not the ultimate goal of a system. So, the role of the parliament became important, the control of the finances by the parliament. So, approvals were required by the parliament. So, change had happened by the British slowly but steadily, and eventually it institutionalized. And the after effects was the colonial underdeveloped in the developing countries, like for example India, had also brought in a system by institutionalizing the financial administration. The second country which I was speaking about was America. When US had also saw the repercussions of revolt, they also realized the Magna Carta of 1215 was very important. Influenced by it, they said no taxation without representation. So, they wanted to bring in some system where the people were responsible for the finance. Although it was haphazard, the Congress was not committed to its revenue and expenditure system. But the Hoover Commission, the first commission, brought in a managerial study in budgetary system. And the second Hoover Commission brought in a tremendous change where the president was involved in the treasury. So, like the purse and the disbursement of funds was a complete objective and also a separate department taking into the finance of the country. So, I gave you two examples and how India was influenced by also the British Parliament and its impact on its finances, making us a very steady economy, although not a highly impactable economy, but a sustainable and a slow economy. Now, dealing with the tool of accountability, we need to clarify a few things. One thing is you need to know clearly identifiable operations which are successful, which can be implemented, which cannot be stagnant. The second one is the preparation of the estimates. Estimates play a very important role in budgeting or a financial process. So, also the appropriation of funds, expenditure controls, accounting, auditing, reporting and reviewing. These are all the tools of accountability for any financial system to be effective. If you have to harmoniously work with an integrated policy, then you need to see that there is a clear objective, there is a proper appropriation of funds, there is an expenditure control, there is an accounting system, there is an auditing system, a reporting system and a review system, so that you make the system flexible and also dynamic in nature. Talking about the two important aspects, we will first deal with revenue. When you talk about revenue in India, it is determined by the legislative authority of the sources and conditions under which the government revenue shall be raised and loans floated. The second point would be the organizations and the operation of machinery and procedure for the collection of the revenue and sale of credit obligation by the executive in line with the legislature and executive responsibilities should be nurtured. If there is proper conduct or process or procedure of the revenue as well as the sale of credit, then we are in line with a very impactful economy. Now, we can also talk about the maintenance of records, revenue collections, balances due, credit sold, which needs to be accounted so that we know what is the status of revenue, and then we can deal with the expenditure. There should be independent audit system, should be independent, and also there should be autonomy, and that is what the Indian Constitution is provided with the CAG, which gives an independent power to audit and also look at the revenues and expenditures, which is very important as far as the Indian economy is concerned. And also reports of the revenue as well as the loan has to be intact. So, we will know what are the sources and allocation of funds which is available in a system. Next, we will talk about expenditure. When you talk about revenue, we should also talk about expenditure. There is no system without expenditure, and most of the systems, if you see, the expenditure will be a little more than the revenue. And that is a very big challenge the world is facing right now. Now, as far as the expenditure is concerned, one should know that you should have the statement of the sums required for the due conduct of public affairs at various levels, at department levels, at agency levels or the ministry level. The expenditure should be mandatorily have a stable balance account during the period which the estimates relates, so that the expenditure will be curbed. Why do I say that? Depending on the expenditure, then we will know for the future what will be the expenditure like that, and then a revenue can be resolved. Also, the estimates of the probable income and revenue and loans on the basis of existing provisions of law, regarding public dues and credit operations can be accounted. The statement showing conditions of treasury in terms of assets and liabilities is also an important prospect for expenditure. An integrated statement by the central budgeting agency is made. How? Because if you see that if all the agencies are in line with the system, then when you integrate it, you have one expenditure amount which can be estimated as a possible outcome for a budgeting process. So, you have the budget or the financial statement prepared based on the estimates of the expenditure of the previous years. There are also related actual current as well as estimated receipts and disbursement. Disbursement is also an important aspect as far as expenditure is concerned. Budgets submitted by the executive shall be reviewed by the legislature, and the legislature has complete control over the budget because the legislature has people representing the society, and that is why it needs a legislature approval. Then you have the estimates, the grants of funds, existing revenue and borrowing arrangements for preparing the budget. The executive's role is tremendous. Although they act as a backbone, they are responsible and accountable for various aspects of governance. Now, if you take the executive translates the will of the legislature into organizational and operational terms. And the safe custody of public funds can only be seen in the banking system. And that is why we have few nationalized banks which are responsible for the safe custody of the funds. So, not only the banks are responsible, but also the executive is responsible for the smooth functioning of public financial administration in a country, especially in India. As far as financial administration is concerned, we had already mentioned that it is both an art as well as a science. In the case of policy making, in the case of planning, decision making, coordination, control of process of securing adequate resources, ensuring their safe custody, and finally, a most important aspect for sustainable development, which is a socio-economic development. It will also benefit socially as well as economically. So, financial administration we can term it as a technically maximizing financial output and the optimization of financial resources. This is a wonderful definition for financial administration, that is technically maximizing financial output and the optimizing of financial resources. So, I would like to quote another quote from Kautilya. The entire administration of the country can be controlled through financial administration. Hence, we must focus more into financial administration, and that is why he brought out the book called Arthashastra. Financial administration, as I mentioned, is the lifeblood of a society, because you see that the blood circulation can come from the head till the toe, which is very important, and the circulation should be regular and also it should be dynamic. So, it is an important aspect for any society, and as we are saying, blood is important for a human being. So, also finance is important for a society to be successful or it is to be very good, then the society needs the help of finance. It is a system that deals with inputs and outputs as well as the mechanics and process behind the transformation of inputs and outputs. Now, we will deal with the nature of financial administration. Financial administration, as we already discussed in detail, it is art and science. It is also a systematic and specialized branch of knowledge of the techniques which can help in administering financial resources for optimum preferences and better performance. It is also directly helping and guiding the administrators in formulation and implementation of financial policies of an organization efficiently and systematically. So, financial administration can be considered as a national building prospect. Hence, we consider it as an art because it contributes to the nation as a whole and also help in the managerial system or management of funds as an art. And why do we say it is a science? It's science because we are applying scientific methods to understand the functioning of different aspects of financial administration. We need a formula for formulating a budget. It doesn't happen just by assumption or hypothetically. It happens through formulas and it happens through a process. So, it is scientific as well as systematic. The income and the expenditures are projected scientifically through graphical representation, through statistical analysis, and it can be collected directly or as well as indirectly. So, if you see, financial administration will help to remove inequalities of income. It also transfer the income from the rich to poor, which is a very difficult aspect in the present day time. We see how Amartya Sen had mentioned that rich becomes richer, the poor becomes poorer. But the aim of financial administration particularly is to reduce the inequality of income and also to bring in the poorer aspects as an important goal for eradicating poverty or also reducing or bringing zero hunger and also bringing a proper livelihood to the people. It also allows smooth flow of investments, optimal allocation to increase national income. It also provides a state which must produce public and private goods to maximize national income, which will also benefit the GDP. Now, what is the scope of public financial administration? The scope of public financial administration is increasing both magnitude and complexity. It involves the discipline of economics, political science, of course, public administration, commerce, international relations, management, statistics, philosophy. So, we see that the entire discipline is associated with financial administration. The other areas which it covers is the fiscal policy, which also we will be dealing in few of the other lecture series, the economic policy, the fiscal planning, the monetary policy, planning and management systems. And there is a tremendous relationship between public administration and financial administration. There is no Kautilya's Arthashastra which is not mentioned in the public financial administration discipline. Every aspect of administration is linked with the finance as mentioned in the Arthashastra. So, when you talk about administration, we talk about the public financial institution which is associated with the public enterprise, and we know that public enterprises are not faring very well. So, it is also important to understand that administration should influence the growth of public enterprises and also the influence of public financial institutions. Now, if you talk about budgeting, budgeting is mostly based on zero-based budgeting or tax administration, financial accounting and management accounting. The scope is enormous as far as public financial administration is concerned. There is also financial auditing and management auditing. There are also different levels of financial administration. It starts at the federal level, state level and at the local level. There is also a regulatory financial administration, and we also need to look into the issues in financial administration. Education, training and research in financial administration should be given due importance. Finally, we also need to know the scope also allows us to think about ethics and integrity in financial administration. And it's also important study on the comparative finance of different nations so that our finance can be improved. There is also disciplines like modern management and financial management which helps improve the financial system. Although you need not go technically, but you can go to the art of financial management. Financial control is directly involved with the legislative, the executive and the judiciary. Thank you.